My name is Derrick Weyrauch. I'm the president and CEO of Palladium One Mining. Palladium One is a PGE green energy metals focused company operating in tier 1 jurisdictions, Finland and Canada specifically. We have a very strong institutional shareholder base, and we are well financed to advance our strategy of developing large scale resources in both jurisdictions.
Derrick, good to see you, and thanks for coming on the show. Appreciate it. Now, you're going to help me a little bit here because I think myself, like a lot of people out there, don't really understand PGE. The PGE space is just a mystery. It's a black box, and I want to understand more because I think there's opportunities. If I'm looking at the pricing there, equity should follow at some point. One imagines. So, right, your company, you're in Finland, you're in Canada. Let's just kind of focus on the PGE bit today, if I may. But first, let's start with you. What's your background? What have you done?
I'm a Canadian chartered accountant by background, been in the mining space for 15, 16 years at this point in time, and currently sitting on a couple of boards. Prior to this, I was involved with the restructuring of Jaguar Mining. Immediately prior to that was the sale of Andina Minerals, which is a large gold project in Chile.
Right, okay. So what's the other board that you sit on?
Cabral Gold.
Cabral, we know Cabral. We like Cabral. In fact, I think I'm chatting to him next week. Good company. Right.
It's called Magna Mining.
Okay, yeah, and we've had those guys on as well. In fact, we should get them on again soon. Talk to me about the team around you, because you're a chartered accountant, right? We're in mining. It can get technical. So who's supporting you?
The guy really on the ground making the decisions with regards to the exploration programs and advancing them on a day-to-day basis is Neil Pettigrew. He's a PGO based out of Thunder Bay, Ontario. He's got 20 plus years of experience in this sector, and he's extremely well supported as well by Peter Lightfoot, who's on our board of directors, former chief geologist for Inco Valley.
Okay, fine. And so have you entered this? Why are you the president and CEO?
Quite honestly, there is a dormant Vancouver shell a number of years ago, about 2.5 years ago, that some shareholders thought needed a management change, and they asked me to step in and restructure the company. I do have a bit of a restructuring background. I'm doing it for about 30 years. So I took the seat, and we've been advancing the projects, and I think driving a lot of value from what we've been doing.
Okay, so restructuring is quite an art. So you brought these new faces in here, or were they already there? I just want to be clear.
No, it's a brand new team.
Perfect.
Board management changed 100%.
Right, and what about the assets? We're sitting in Finland. Let's talk Finland first. I mean, was that already there?
It was already there. It was actually an asset that I was trying to acquire previously, but wasn't getting any success. So it was nice that it was sitting there. I had a view that it was a robust system. There was something to be done, but it had been dormant for quite a few years. So we basically dusted off the files. You've
dusted off, right? So I decided to leap in. I'm just interested. I want to set the scene in my head first, and we can get into the detail in a second. So you've also got assets in Canada, but they're different, completely different. So how did those two sit together?
Well, the Tyko asset was actually the one that was the listing vehicle or the listing asset for the company, and it had been sitting dormant as well.
And do you think it has any value? Has it got any value today?
I think it's got a tremendous amount of value. It's certainly got a lot of people excited because it's exceptionally high grade intercepts. We had a fantastic discovery about a year ago, and it's really caught the market's attention. Still earlier stage than where we are in Finland, but when you're putting out drill intercepts of 10% nickel equivalent over 4 meters starting at the surface, that's pretty good.
And so there's no intent to spin that out. It's a case of de-risking, different jurisdiction, different commodities. You're happy with that mix at the moment?
Well, no, I think there's a credible argument to say to split the company into the two assets. You can make the argument that they should stay together because they're all green metals or green transportation related, because in Canada it's really nickel copper are the dominant metals, and in Finland we add the PGs, and the predominance of expected revenue is going to be on the PG side of things, which goes into transportation as well, but they are different. So we don't have any set plans right now, but I think once we are very comfortable that both entities can stand on their own and not become a micro cap that doesn't get any love in the market, then we would look at that. Or perhaps there's somebody going to knock on our door that wants to monetize one or the other. Happy to have that discussion at the right time.
Yeah, it's kind of an interesting one, isn't it? It's like sometimes people say, "Oh, yeah, it makes sense to de-risk by having different options on the table in case something goes wrong in one sector or commodity." Others say, well, it's a very confusing message and confusing narrative in the marketplace. At some point, you've got to make a call. So at the moment, it's a waiting brief because things are working out fine in terms of the drilling on each. And then...
Yes, but Tyko also, I don't believe, is mature enough to stand on its own just yet. We need to advance it a little bit more. But I think what people need to appreciate is when you look at the ratios that we have in Finland, okay, and I assume the metal ratios when we do our upcoming resource later this quarter are going to be fairly consistent. But we basically have a 50-50 split between precious metals, so palladium, platinum, gold, and battery metals, cobalt, copper, and nickel, right? So we're 50-50 there already. So yes, the Canadian asset adds, once we get to the resource stage, it's going to add more on the copper nickel side of things. But we're already in that space, even if we just stick with Finland.
Right. Okay. Well, maybe we need to kind of row it back a bit and say, like, right, okay, you're turnaround expert. You put the team together. You've got a couple of assets sitting in there at slightly different stages, but both fairly early. So the plan or the brief to you when you were brought in was to do what? Turnaround is one thing, but a growth plan is another. So what was your vision?
Well, the first step was that when I was asked to step in, the shareholder said, look, we think there's an asset here in Finland. We're really not sure. Can you take a look at it? So that's what we did. It was the first order of business to, first of all, secure the asset, then assess the historical data, reinterpret the information, re-assay, et cetera, and that culminated with an initial resource for the company in September of 2019. And it was a sizable resource. Palladium equivalent was about 1.2 million ounces, and it got people's attention. It allowed us to raise enough money to go to the next step because the thesis of is there a real asset here was proven, but it wasn't really of a size where it was critical mass. So you could say, yeah, clearly there's a mining scenario here. So, given what we have in terms of the asset, it's quite large. We know it's been reconnaissance drilled already. We have all the historical data. We said, okay, there is a thesis here. This thing could grow quite a bit. So we raised a little bit of money to start in 2020 and hit it hard from an exploration perspective. Unfortunately, COVID, like so many people, sidetracked us. But we did have a fantastic discovery in August of 2020. And since that time, we've had a lot more market attention, and we've been focused on doing the definition drilling to dramatically expand the existing resource. And that's in what we call the Kukua area. And that will be published later this quarter. So the thesis was, first of all, is there something there? Yes. Is it real? Yep. Can it grow? Yep. So we're just working our way down that continuum. And if the resource that we publish here demonstrates critical mass, I think you'll see us moving towards a PEA very quickly.
Okay. So it kind of partially starts to answer some of the next question, which is right. So that's the game plan. The strategy you started to outline there. It kind of feels like it hasn't. You got hit by impact. You got impacted by COVID, because we saw the massive interest. After September last year, 2019, COVID comes along. You dip. You recovered quite well, and you saw dizzy heights of heading up towards 40 cents, right? And then it came off in the middle of last year. Do you think that you're moving at the pace the market expects you to? Do you put that coming off down to the fact that I guess precious metals more broadly came off in the second half of last year? I mean, because the strategy is really important here, because you've got to talk to the market in a way that informs them and educates them as to what you're doing specifically and how you're going to get to whatever outcome it is that you're targeting.
No, absolutely. So in the latter part of 2020, after we had that discovery, we started getting a lot of interest from various institutions. But quite frankly, the problem we had at that time was that we had an incredibly large warrant overhang. And those warrants were going to be expiring in December of 2020. So those all got, like say for maybe 100, 200,000, they all got exercised. So we actually had over 60 million, 70 million shares trade in the market as a result of warrant clipping. That put us into a very good cash position. So we closed, I think it was December 2nd, at about 15 cents per share. And immediately the share price without that overhang took off, and we were able to complete a bought deal short form prospectus financing at 29 cents. And we announced that only a month later. And then unfortunately, shortly thereafter, we had the next tranche of warrant overhang, which was hitting us in April and May of 2021. So
yeah. The trials and tribulations of being a mining CEO. The market will come and remind you it's there at the slightest provocation. So there's some money raised, which was, and people have come in at much higher rates than today. What can you say to them about the strategy or what you're hoping to do? You can only control what you can control, right? And the market has come up more broadly, not just you, your peers too. But what do you think it's going to take in 2022? You're being very clear and talking about this resource Q1 now. Do you think it's going to be enough? Because sometimes catalysts come and go and no one really cares.
Well, that's true. And the other backdrop that we're faced with right now is the global chip shortage, which is affecting automotive sales. And the platinum and palladium go into the catalytic converters to deal with the environmental issues and mitigate the harmful effects of the exhaust. And with reduced sales, we've seen over the last little while has been a reduced spot price of palladium that I think to some degree has been factored into the share price as well. So what we've been very fortunate in that we've got a very robust treasury, and we've been able to take a very disciplined approach and execute a plan to add value by increasing the endowment and getting that drilling done and finding discoveries on two continents. So the strategy for Finland is very clearly to define a credible mining scenario. Right now, for an investor to look at the company pre-PEA, there's no cash flow analysis that we can offer the market. So there's a little bit of thumb sucking that needs to happen, right? I'm going to pay so many dollars per ounce to value this situation. And, I use gold as a proxy. You see gold companies trading $50, $100 an ounce. Maybe something in that range makes sense. I don't know for the investors to decide what the number should be. But once we believe we have the critical mass, then moving to a PEA is going to allow investors to look at a net present value analysis and take a better view of value on the company. So we're really driving towards that position as quickly as we can, coupled with, because we're only focused on a very small part of the property package, we need to continually look at the regional exploration upside and how large this thing could actually be. It's a bit of a
yeah, it is. You are hampered by the fact that not many people understand this package of commodities, PGEs, right? And you trying to frame it in language that people understand. You're doing that, and so a lot of people in the PGA space, and we've had them on the show, and it's just must be frustrating as anything because people aren't getting it, right? So what else can you do? What other language can you use? Or is it just, quite frankly, if we put some numbers on this thing, we feel very strongly that people will understand the economics or start to understand the economics?
Well, I think certainly there's no frustration because it is an area where people just aren't focused. It's more difficult. There's more education needed to get people up to speed in the PGE world. You think of global mine production of platinum was only about 6 million ounces a year pre-COVID. on palladium, it's only about 7 million ounces pre-COVID. 90% of that is a byproduct of other mining activities, whether that be nickel or platinum. So, it's not a very big market. You have to explain that to them. And you also have to educate with regards to the sourcing. You've got 80% of palladium coming from Russia and South Africa to what I call, higher risk jurisdictions in something like the EU, where we are in Finland. So the educational aspect of it, and talking about, well, are you aware of the environmental situation in Russia? Are you aware of the power issues and the lack of reinvestment in South Africa? Well, the world needs it. There's a reason palladium is on the critical metals list for so many countries, right? It's needed. So if these two jurisdictions have a bit of a hiccup, or one has a bit of a hiccup, where's the metal coming from? We need another source. And what we have is actually a deposit where the primary metal is palladium, right? And PGEs generally. So I think we're in a very good position, but there's an educational aspect that we have to go through with investors just to get them comfortable on the space. And we also talk about the fact that we've seen South African companies, platinum companies, diversifying their jurisdictional risk by investing outside of South Africa. We saw Impala buying North American palladium. We saw Sibanye buying Stillwater. There's a bit of consolidation that's gone on as well. So, we need to go through that education and make sure people understand what the market is, because they're not naturally inclined to look at it. And then we need to also do the work associated with our project, which is doing the work properly, getting the discovery, making sure it's robust, and moving it along the project development path.
Right, which is a fairly conventional approach, and perhaps in this space it absolutely needs to be. But I just come back to your game plan here, because as you've outlined, that the market, there's a few big players. Right, there's a few big jurisdictions and a few big players. Right, Sibanye Stillwater, everyone knows, and they're going around buying up a lot of green commodities at the moment globally. Because of that, and you are a pure play. That's great. Because of that, do you need to have, or do you desire to have a shorter time horizon than perhaps you otherwise would? Because if I'm talking to a typical Canadian company, we're going to drill to the edge of the envelope, we're going to see the size of this thing, and we're going to take our time to kind of work out and build up the value of this thing. Given the nature of platinum, palladium, in this market, you've got short windows. Prices are good at the moment. They may not be like this forever. Do you have to kind of rush through the process, get the studies done quickly, give people a sense of the economics, and then leave something on the table for the next guy and get out?
Well, it's a balancing act for any CEO, and especially in the context of a junior mining company. So you can spend a lot of time building out a huge resource that's going to have, incredibly large throughput. But what you're really doing is you're building yourself a big capital wall that you're going to have to jump across. And there's a lot of examples of companies out there that have tremendously large resources, and they've been hung for years because there's no credible path for the entity to build that project. So the balancing act is to find something that is of sufficient scale to give a long mine life. It's an incredible scenario, while leaving some meat on the bone with regards to regional exploration and growth of the asset. And it's a balance, because you don't want to do all the drilling, but you've got to do some of the drilling to communicate and give the buyer the interest in the thesis, just as we've done over the last 2 years. It's just continuing the same thematic, but from a different starting point.
Right, but you've also, your job is also to create some competitive tension, right? If there's very few players in the space, that means there's, and a few people you pick up the phone to, or maybe inbound to you, however it works. Does that make it harder? Do you have to play it a different way in that? Because if I'm a gold guy, It's gold everywhere, right? There's always gold bars, and there's periods where M&A takes off. In fact, now it seems to be happening a lot. Here, given what you've learned or what you know about PGE, do you have to play it a certain way? How do you set yourself up to be attractive? Show a bit of ankle, as it were.
Well, I think what we need to do as a company is de-risk the project in the eyes of a mining company. That could be a potential buyer. So what we have going on right now is a very extensive metallurgical program. So unlike gold, where maybe you've got gold, you get a little bit of copper, it's pretty straightforward from a metallurgical standpoint. Well, in our case, palladium, platinum, gold, cobalt, nickel, copper, it's a little bit more complicated, right? So extracting the maximum amount of value to prove that you've got an economic deposit is absolutely paramount, and that's why we're doing a very extensive program currently in order to tick that box on the de-risking. And I think the work effort that we're putting in now, in my judgment, I'll leave our metallurgists to tell me otherwise, is really trying to position ourselves well for a PFS as opposed to just at a PEA level, right, or even at a resource level. So we're going to be doing variability testing over about 18 or 19 different lithologies and grades in order to get a proper representation of the ore body. Unlike others that had this project in the past where the metallurgical work was done at an artificially high grade that wasn't representative of the ore body, we're saying, no, let's build a master composite that actually is representative of this project. So I think that when that data comes out, it's going to be a big box being ticked. The next big issue, really, from my mind, apart from doing the PEA and the economic parameters, is permittability. Are you able to permit an open pit mine in the EU or in Finland in particular? So we've already started that process from the perspective of getting some of our baseline studies underway, building the permitting roadmap, and looking for what might be gating issues.
Right. So help me. I said at the beginning, I could need a little bit of help here, and I expect people listening to it will, in terms of trying to understand what you've got in Finland. Okay, that you've got LK. I'm not even going to try and pronounce these. LK and KS. We'll go with two projects there. So, how much money's been spent today? How many meters have been drilled? And when you talk about this, the disconnect between what the grades that it was being tested at and the assumptions being made then versus what you were trying to do now, give a more representative set of numbers. Can you just tell us a little bit about each of those projects?
Sure. Well, the KS project is a massive conolith or pipe or big garden hose that goes across the country, starts off at the Russian border and comes over into the Koillismaa complex where our LK project is. And it's the feeder of the magma flow. So it's deeper, it's potentially very high grade massive sulfides, and it sticks out on the gravity and the magnetic geophysics work incredibly well on a regional scale. But it's a higher risk, higher reward situation. So from a risk mitigation perspective, we're not actually spending money on that project as I speak. We're going after the low hanging fruit, which is on the adjoining LK project. And the LK deposition, if you imagine a big pancake coming through being deposited on the surface of the earth, coming through that garden hose, is what LK is all about. And it was broken up into a number of different large blocks, and they were tilted up and eroded and things like that. But the base of those have been pushed to surface, and that's really what our target is. So we've got 38 kilometers of this contact, or basal contact as it's referred to, or marginal series as well.
Right, and so give me that span, the meters, and in terms of, because I'm trying to understand, is it a high grade, low grade situation again? How do people look at PGE? Yeah,
so KS is potentially ultra high grade. We just don't know at this point. There's only been one drill hole that even intersected this. The Finnish Geological Survey did last year. LK is a lower grade, bulk tonnage situation, open pit that's at surface. What we're looking at, outcrops in Kakua, it's under only about 9-10 meters of overburden in this other zone that we're looking at. But we have 38 kilometers of this contact zone. The whole zone has been reconnaissance drilled historically by the Finnish Geological Survey at Outokumpu, and we have access to all that data. What we've done is we came in, we did geophysics to induce polarization, because it's been proven to work and correlate very well in this type of setting, and here specifically. We use that as a vectoring tool for the discovery at LK at the Kukua zone. Now, we're only talking about extensive drilling and resource definition drilling over about 3 kilometers of the 38-kilometer strike. Well, when you get into our presentation, perhaps on a subsequent call, you'll know that just in that Kukua area, the anomaly is 7 kilometers long. There's a lot more drilling to be done, and we've got other anomalies on other parts of the property. So, 12 kilometers south of the Kukua zone, we've got what is called the Hakiaho zone, where we published a resource this past September. Lower grade, bulk tonnage, 1-to-1 strip ratio, and it's in probably the largest blue sky trend on the property. It's 17 kilometers in one foul swoop of contact.
And so how many drills are turning?
Currently, we're focused on the metallurgical work and getting the resource together. So we had a drill cutoff of the end of September for purposes of the resource. So our efforts currently are all into getting the resource done, the mineralogical work, the isoprobing, et cetera, et cetera.
And it's kind of interesting because, again, part of the confusion or the lack of knowledge on this is because you're talking about copper, nickel, palladium, platinum, gold in there. It's difficult to help people understand how a company goes from chase or what you're chasing down, and what you should be. What are they thinking about you? You're not a pure play palladium company because you kind of got
by no means.
Right.
The rock has all these things in it, and what you're trying to do is extract the maximum value of all these different metals. So palladium is the dominant one from a revenue perspective, is our expectation. But 50% of the revenue is palladium, platinum, and gold. The other 50% of revenue out of this rock is the cobalt, copper, and nickel. You can't say I'm only going to do copper today, or I'm only going to do platinum today. It just doesn't work.
So if I'm trying to do some analysis, I'm new to all of this. I'm coming in. Who are your peers? Who's doing it right? Because if I think of polymetallics who've done quite well, Adriatic metals, I would look to them. But who do you compare yourself to?
You really got to look at the PG space. So there aren't a lot of players in the space right now. The obvious one right now that is trying to push towards development is generation mining. That would be a good example. You could look at clean air metals. It's different. They're looking at an underground scenario. And then there's a number of private companies. As I said, North American Palladium was acquired fairly recently. There's another large PG project in Finland called Suhanko, about 80 kilometers to our west, but there just aren't a lot of players. In what I'll call the tier 1 jurisdictions. If you want to go into South Africa, there's a lot more palladium being produced. As I said, it's a byproduct of the primary metal being platinum. But we really don't look at that as an investable jurisdiction.
Okay, so no drilling at the moment. You're doing the met work on this, and imminent resource update, and then PEA to a PFS standard seems to be what I'm hearing. Do you envisage doing more drilling this year?
Oh, absolutely, yeah. No, we're going to want to do more drilling. There are some zones in the existing resource envelope that we thought we had faulting going on. It turns out to be dikes, so there's some additional tons to be done there. There's some hydrological drilling we want to do, some basically drilling to de-risk the pit slope design.
Right. Okay. And so that's good. And have you allocated a budget? Have you given any guidance as to what you're going to be spending on that?
We haven't given any guidance at this point in time. We're waiting for the resource. We want to get through this period before we guide the market too much. What, if you look at our September 30th cash balance and add the financing we did in December, that would pro forma give us about 18 million in cash. Realistically, there's a burn rate, so I think your audience should think that we're probably closer at year end to about $15 million in cash. And we were very fortunate that financing we did in December. That was at a 52% premium to market, and it all went to one precious metal fund.
Okay, and then are they named?
They are not named. No.
Okay. Someone's came. Is that European?
Yes.
Okay. Okay. Right. So let's bounce over to Tyko in Canada there in terms of plans for that, because I said it's a little bit earlier in the process. So again, how much time, effort, money being spent there this year?
So we have about $5 million allocated for Tyko this year. We, as I said, we had a fantastic discovery last year, about 10% nickel at surface. We've traced that in this one zone called Smoke Lake over 430 meters. But quite frankly, we've run out of drill the pad locations that have been permitted. So we can go to the same pads that have been permitted and drill the same stuff. So we don't want to do that. So we've submitted an application so we can go outside of that zone. That's still sitting with the government. We should have the permits already. We don't. So we're continuing to work on that one. But not only that, we did a very extensive geophysics program across the entire property last year. And we have a few multi-line EM anomalies. And we also went out last year and we did soils, just like we did at Smoke Lake to vector us into the right area to drill. We did soil sampling and we got some extremely high values of copper and nickel in the soils, and actually some very interesting cobalt values as well, especially at the bulldozer anomalies, both north and south. So we've got separate drill permit applications in for each of these multi-line anomaly zones. We want to drill those as quickly as we can, and we're currently building a winter camp in order to be ready as soon as that permit lands.
It's interesting. I think nickel sulfide is very topical last year. A couple of acquisitions in the space as well. So we talked earlier about the potential of a spin out. It's a bit early because you want to have a bit more data, for any sort of JV type conversations or spin out conversations that you may want to have. 5 million is probably not going to be enough, is it?
It's going to be enough for the first pass at each of the areas, and the results of that will tell us where we're going to go. Okay. So how much more effort?
But we shouldn't expect to see too much this year in terms of the decision making for what you do with that. It's build up the value as best you can, build up the understanding, build with the data, which moves you forward to the next phase of decision making, which is either go raise some money or maybe bring someone else in.
Well, exactly. You can't control the timing of a buyer, so you just got to keep working it and making it better. Certainly, when we had the discovery, we got on the radar of a lot of very large companies, a lot of inbound calls and wanting to have access, and some of the conversations were with regards to getting involved with the project on ways that we didn't think were appropriate. And we've had other situations where people have approached us and said, "Hey, I'd like to acquire it. Here's some stock in my microcap junior." So, at some point in time, the right situation is going to occur, and we're obviously going to try and create it as well. But in the meantime, let's grow the resources, test the targets, and see if we can drive some significant value. Because personally, I don't see that we have a lot of Tyko valuation in our share price. We trade very much aligned to the precious metal stocks and the GDXJ itself. But there's not a lot of value there, and I think we need to find the right path to daylight what we have at Tyko.
And so, who else is in and around that? Because obviously, nickel, copper, obviously, ever so popular, and Ontario, good province for mining, exploration. Are there any names operating in and around you that we might be aware of?
With regards to
these kind of ultramafic deposits tend to cover wide areas. And I just wondered if anyone else was in there digging and poking around, doing the same as you.
Yeah, we're in an atypical terrain. It's a big batholith. So it's a metasedimentary belt that was intruded, and we've got the entire bulldozer intrusion in our property package. It's about 25,000 hectares in size. So there are a number of companies that once we had our press releases going out, they staked around us, and we've been encircled to some degree. But nobody is that I'm aware is active as we are in the immediate proximity. We're just south, about 30, 50 kilometers of the old GECO mine, if people are familiar with that, or about 55 kilometers northeast of Marathon, Ontario, where Generation Mining is. So, and Hemlo's not too far away, nor is Hart Gold. So it's an interesting little area, but as you point out, nickel sulfides are rare. They're not everywhere. And there just isn't enough inventory out there of projects for investors to look at. And given the grades that we've demonstrated, we're pretty happy where we are with this project.
Yeah, they're interesting actually, because the sulfides do tend to attract the big boys. So it's not just about high grade headlines. It's about amount of contained metal in there that attracts people. And this is a sort of copper nickel story. I guess it's going to get everyone's attention if you can do more drilling. I noticed that it's actually very shallow drilling too.
Yeah, it actually goes to surface. So it's Smoke Lake. If you're looking at the presentation, that bit of a bullseye, yeah, that's at surface.
Okay, that's got to help with the costs. Has there been much drilling there before? I mean, before you guys?
No, there was zero drilling there before. Quite frankly, we were focused on Finland, but in order to maintain the property, you need to do a minimum amount of spending each year. So the first year we had it, we hit the minimum, which was big 20,000 Canadian dollars. And we had fantastic results from soil surveying in and around Smoke Lake. The next year we spent $50,000 and had spectacular soil results similar to what we're seeing now on these other anomalies that I talked about earlier. And from then we came into COVID and said, hey, let's go drill, raise some money, and applied for permits and drilled as quickly as we could.
So, and whereabouts are you? I mean, in terms of infrastructure, I guess is where I'm going to. Well, if I look at the Noront deal with BHP and Wyloo, I guess it doesn't matter. But if you get the scale, but where are you?
So, from an infrastructure perspective, we've got good road access on both the east and west sides of the property. But you're talking, an hour and a half, 2 hours away from town, depending on if it's winter or spring, that type of thing. So. There isn't a lot of infrastructure other than the logging roads. Fortunately, the property has been logged in the last couple decades, and those logging roads are intact and serviceable, which is allowing us to get in. But we're building a camp simply because you lose too many hours in the day if you're driving people back and forth an hour and a half each way.
Yeah, for sure. Well, Derek, I think let's kind of call a halt to this now. I would very much like if you can come back in and maybe we'll dig down on some of those areas that we've kind of signposted today, and maybe get into a little bit more technical analysis with you in Finland and clearly as things progress with. Tyko, I'd love to know more about that too. I think it's an area I quite like. So appreciate your time today, and good luck with this year.
Well, thank you very much. It's always a pleasure talking to you, and look forward to our next chat.